Hey guys, it's Kim here from OC Tax Break. Before we get started, make sure you guys subscribe, hit that notification bell, and give this video a big thumbs up. Today we're going to talk about IRS red flags. How to avoid getting audited. Now there's no way for you to 100% get yourself set up so that you're not audited. It's just sometimes a random thing. So I can give you tips on what always flag it, but again, there's no sure-proof way of not to get audited. So number one reason that people are audited is they're not reporting all their taxable income. Now, when you get a 1099 or a W-2, the IRS is getting the same exact information. So when you fail to report one of those 1099s, a W-2, any interest that you have, which is a 1099 INT from your bank, those are reasons that you'll get a letter stating, hey, you were understated your income, here's an adjustment, now this is what you owe. So make sure any forms that you get, you are reporting them. Now I do have a lot of clients who forget to put their securities in, so any stocks or anything you have, even if you didn't sell anything, make sure that you're calling, say, Ameritrade or Chase or whoever it is that those stocks are through, that you're calling and getting those tax reports so that you can make sure nothing was claimed on their side so that you're not forgetting anything on that end. So again, that's number one, report all your taxable income, report all forms that you have. So number two, if you are a sole proprietor and you have a Schedule C, the more money you make and the more deductions that you have, the odds of you getting audited go up. So that is increased with the amount of money that you're making. Unfortunately, you want to make a ton of money, so the odds of you getting audited increase. So make sure that you guys are keeping track of your expenses and that income. One of the biggest red flags you have too, if you are a Schedule C and you're filing not with like a tax person, you're going on TurboTax, is putting all your income and your expenses ending in a zero. So what does the IRS think when you're putting, say you made $100,000, your meals and entertainment were $1,000, your fees were $100, everything's ending in zeros. Why is this a red flag? Because the IRS has an algorithm through their system. They are thinking you are not keeping track of your expenses, you are estimating, and they want to flag you because you might not have the correct information that you supposedly have. So make sure that you're keeping receipts for everything so that you can justify if you are audited that, hey, I really did have $1,000 in subcontractors fees, I really had $1,000 in meals and entertainment, or whatever it is. Again, if you are showing everything ending in 1,000, I always tell my clients, deduct a little bit on it. Instead of putting 1,000 for meals and entertainment, put $999 or put $1,001. Make sure that you are not leaving everything ending in zeros. Number three, when I get new clients in, I always ask for their previous tax returns. And the reason I do this is because if they are a sole proprietor, I want to see what their losses are for previous years. The IRS only allows you to deduct a loss for 3 out of 5 years. So if you're showing a loss on your Schedule C for 10 years straight, that automatically flags you for an audit, because the IRS is going to say you do not have a business, you now have a hobby. You are not making money, it is not a business. They're giving you 3 years to get a profit on there, and then that's it. So make sure that you guys, if you are having losses year after year, talk with your tax person. Maybe a sole proprietor isn't the right way for you to be filing. Maybe you need to go to an LLC or a corp, and then you'll be able to have those losses for more than those 3 out of 5 years. Number four, charitable contributions. If you guys do not have a high income and you guys are showing a ton of charitable contributions, then that is a red flag. The IRS runs your returns through an algorithm, and they know what the average charitable contributions are for your income bracket, and if it exceeds what the average is, then you have a higher chance of being audited. So make sure that you guys keep track of all those charitable contributions, have that tax ID on hand to show that it really is a legal contribution. And then if you are audited, you have all the receipts ready to show. So the next one is claiming real estate losses. The IRS really scrutinizes people for claiming large real estate losses year after year. So make sure that you guys are keeping track of income, expenses, and depreciation really well. If you do not know how to do all that, make sure that you guys are hiring a bookkeeper or somebody to help you keep track of these a little bit better, because this does increase your chances of being audited significantly. Number 7, if you are a Schedule C, a sole proprietor, one of the biggest, and I'm going to say even this for corporations or LLCs as well, one of the biggest categories that is audited is travel and meals and entertainment. So make sure that you guys are keeping track on your meals and entertainment, who you went with, what it was for, and what you guys spoke about, so you can make sure that if you do get audited, you have those receipts to substantiate any questions the IRS has. The IRS looks for stories, I guess I'm going to say. If you can tell a story well enough of why you needed these expenses, then the IRS is going to allow you to take them. If you cannot justify those expenses, they're going to disallow any of those. So keep track of those travel and meals and entertainment receipts and information, just so you guys have that on hand. So if you were audited, you guys already have all that information, because you can get audited up to 3 years prior to what the current tax year is. So sometimes your memory is going to be a little bit foggy about what that meal was for. So if you just write it on the receipt or keep a log or spreadsheet of what you went and who you went with, then you guys should be good. The last 2 I'm going to talk about, and there's a lot more, and I'll probably put together another video on other things that can get you audited, but these are the main ones, especially for Schedule C, is if you're using your vehicle 100% for business use, and then home offices are also highly audited items. A lot of people do not have real home offices, so they know that, and the reason I'm putting these 2 together is because if your mileage is really high and you don't have a home office, then that's going to flag it as well. The IRS does not allow you to write off commuting miles. It has to be from your office to wherever you're going. So if you say have 5,000 miles in for the year of what you're trying to write off, and you don't have that home office, they're going to say, okay, now they're doing commuting miles. But if you do have that home office, they're going to say, okay, so you went from your home office to your client's house and back. Those each way are going to be able to be written off. But if you don't, those are just commuting miles, and that is disallowed by the IRS. So make sure you're keeping track of those mileage of where you're going, what it was for. Even if you're going from your home office to, say, Staples to pick up business supplies, that is deductible. So make sure, again, you're keeping track. You can use an app of or a spreadsheet or anything that's going to help you keep track of that a little bit better. In another video I always suggest taking a picture of your odometer on January 1st of the year, and then also on December 31st, so that you can make sure you know the total miles you went. Even if it's not all business related, you know that you went 12,000 miles for the year, and then you can figure out your business miles from there. Again, you guys can always write comments down below, and if you have any questions, reach out to me by my email. It will be in the description below. I hope you guys enjoyed this. Make sure that you guys give it a big thumbs up, subscribe, and hit that notification bell, and I will see you guys in the next video. Bye.